Hello, this is Leroy Meadows, and in this session, we're going to discuss activity-based costing and analysis. So, what are we looking at when we get into this chapter here? Well, we're going to talk about overhead costs. That's the main issue of this whole chapter. So, and later on in the chapter, we're going to talk about the conceptual part, describing four types of activity that cause overhead costs, and then we're going to apply what we've learned to measure customer profitability. What we're going to work on in this chapter is allocating overhead costs and a number of different methods, three different ways of allocating it, and then also how it applies to activity-based costing to service companies. So we're going to look at allocating overhead costs using a plant-wide overhead rate method. Then we're going to look at allocating overhead costs using a departmental overhead rate method. Then we're going to allocate overhead costs using activity-based costing. And again, this chapter is focused on the treatment of overhead costs and how we're going to allocate it, because there's a number of different ways we can allocate it. So let's go ahead and get started here. Now, as managers, we have to make a lot of decisions. We have to make decisions on product pricing, product mix, the mix of products we're going to make and carry, and then also cost control. How well do we control our costs? Um, and and for those decisions, we need to have accurate product cost information. Now, if you remember from previous sessions, we've dealt with this over and over again. Direct materials and direct labor, those are easily traced to the units being produced. So these costs are clear. I mean, allocating these costs are clear to the units of output. And when we talk about, and let me go ahead and uh, define a couple terms for you. Input is the stuff going into the making of the product. So inputs would be direct materials, direct labor, and then factory overhead being allocated. Those are inputs into the goods and process. Output would be the finished units that are completed and ready to be sold. So output are the units completed, the units that have been produced. Inputs are those items that go into the making of the units being produced. Okay, so since direct costs are easily traceable, we have to look at the indirect costs. Remember, indirect materials, indirect labor, and then all other going to factory overhead, as well as all other indirect production costs. And we allocate that overhead to the goods being worked on, to the units in process. And then those units in process, when they're completed, they get transferred to finished goods, and then they're expensed off as cost of goods sold on the balance sheet. So our focus is on how to do this. We're going to have this factory overhead. We already know we're going to have factory overhead. We already know we're going to have goods to produce. The question is, how do we allocate it? And that's what the focus of this chapter is, the allocation of factory overhead to the goods in process. Now, there's three main ways we're going to look at allocating overhead in this chapter. The plant-wide rate, where we have one overhead rate to allocate overhead to all products produced. And that's a volume-based measure, such as direct labor hours or machine hours. We've talked about that before. And that's what we've seen before. Up to now, we've only seen one overhead rate. The second way we can allocate is departmental rate, where each department will allocate overhead based on a different method. Could be like direct labor hours or machine hours. Again, these are volume-based measures, but departmental rates are going to have multiple rates. It could have two or more rates, one for each department. And the reasoning behind that is some products that we carry will consume more overhead resources in Department A than they do in Department B or C. Other products may absorb more overhead or consume more overhead in product in Department B rather than Department A or Department C. So again, overhead allocation is based on the consumption of overhead resources, and the departmental rate tries to refine that plant-wide rate to get it more down to a departmental basis. And then finally, we will be talking about activity-based costing, where we will have multiple rates. And these overhead allocation rates are not going to be based on machine hours or direct labor hours. That could be, but most likely it's going to be on activities that drive costs, like the number of batches of product produced. So let's go ahead and as we get into this, we're just going to build from plant-wide rate to departmental rate to activity-based costing rates. So let's talk about allocation of overhead using the plant-wide overhead rate method. Now, this is a method that we've already learned about. We learned about in the through job costing, process costing, and so forth. The plant-wide overhead rate method is going to take and have one cost pool. And when we talk about cost pool, it's just a grouping of overhead costs into one pool, into one pool, and then we're going to allocate that cost pool on the basis of some type of uh, measurable base, such as direct labor hours or machine hours. So we're going to have one overhead rate to allocate overhead costs. So every product that we produce is going to receive the same type of product or the same type of overhead assigned to it on the same basis. Now, product one here could use up more resources than product two of the allocation base. So product one would be proportionally higher overhead being assigned to it where than product two, but it's going to be based on the same allocation base here. And the same rate is used to assign overhead costs to all products. So we're going to use the same rate here. Now, if we remember from before, we had plant-wide rate budgeted overhead costs divided by the budgeted allocation base. So this is where at the beginning of the period, we're going to estimate our overhead. And in this case, for the go-kart company, Cart Company is estimating overhead to be $4.8 million for this next period. Now, under a plant-wide rate overhead system, we're going to base that off whatever allocation base we feel is best as a cost driver. And that would be 100,000 direct labor hours. So when we take that 4.8 million divided by our allocation base of 100,000 direct labor hours, we're going to assign overhead of $48 for every direct labor hour incurred in the making of the standard go-kart and of the making of the custom go-kart. Now, Cart Company has two different types of go-karts that it manufactures. Your standard go-karts for like county fairs and stuff like that. And then you have custom go-karts that are going to be made for more higher end, like amusement parks and so forth like that. So now here, if we're looking at the number of, when we're figuring out our budgeted allocation base here, we're already going to have our overhead costs. But now we're going to be calculating our budgeted direct labor hours, and we're going to have 100,000 of those. Now, how do we get that? Well, we're going to estimate the number of units we're going to produce for each. So for standard, we're going to produce 5,000 units. And since we're allocating it on the basis of direct labor hours, we're going to need to figure out how many direct labor hours are going to be involved in the producing of those 5,000 units. So the number of direct labor hours I'm going to incur for making those 5,000 units made, and each one takes 15 direct labor hours, so 5,000 times 15 will give me a total of 75,000 direct labor hours. Now let's look at the custom go-kart, because we have two different products here, so we have to look at both products. under the plant-wide overhead rate method. We have to look at all the products we're producing. In this case, we're producing 2 products. So a custom go-kart, we're only going to make 1,000 of those because those are probably going to be more expensive if we're customizing them. So we are only planning on selling 1,000, but each one of these takes 25 direct labor hours per unit. So the number of direct labor hours we're going to need, 1,000 units times 25 direct labor hours per unit, would give me 25,000 direct labor hours to make custom go-karts. So the total direct labor hours for making go-karts is going to be 100,000 direct labor hours. And that's where we are getting our allocation base here. We have to go back for a plant-wide overhead rate method. We have to look at how many direct labor hours are we going to use for each product. And then we add up the total of direct labor hours used for each product to get the total for the what we're going to produce this period. And that's where we're getting our 100,000 direct labor hours. So now we're going to allocate overhead based on the rate, $48 per direct labor hour here, times the direct labor hours used. So $48 per direct labor hour times the number of direct labor hours used per unit. So each unit is going for standard go-karts is going to have, in addition to the direct materials and direct labor costs, $720 of overhead allocated to that. Our custom go-kart, same plant-wide overhead rate method, $48 per direct labor hour, and this one consumes more overhead. Why? Because it's more labor intensive. And so $48 per direct labor hour times 25 direct labor hours used per unit. So for the custom go-kart, whatever the cost of direct materials and direct labor are, we're going to add $1,200 per unit, not per hour, but per unit of overhead costs. So now let's take a look at the cost of the cart itself, the product cost. Now, how do we get it? We find out what our overhead costs are. We calculate our overhead rate, and then we allocate overhead. That's what we've done so far. So now let's get the total product cost per unit. So for the standard go-kart, where you're going to use $400 of direct materials, $350 of direct labor, and again, just like what we calculated here, $720 of overhead. So the total cost of the product per unit or per go-kart is $1,470. The custom go-kart takes $600 of materials, $500 of direct labor, and an additional $1,200 of overhead. So our product cost per unit is going to be $2,300 per custom go-kart. Now again, why is that important? Because we have to determine what is the product mix. And as far as going over here and determining how many units we're going to make, then we have to figure out what is going to be our pricing, because we need to know the correct amount of overhead in order to determine the correct product cost per unit so that we can use some type of pricing mechanism, whether it's cost plus a certain markup, which we've already looked at in the previous chapter, or we can take the target cost method where we look at our costs and see, do they have to come down because we want to guarantee we can only sell it at a specific price. Now that's more later on another chapter on those, but those are some pricing decisions we have to make. So that is the plant-wide rate method. This is something we've already done before for like one product, but now we just applied it to multiple products here. So now you can see how we apply it to multiple products. So that's the plant-wide overhead rate method. And that's what we've been using for now. We only used it on one product before. Now we're using it on 2, just so you can see how it splits up when we have multiple products that we are making for our customers. Now, let's look at allocating overhead costs using departmental overhead rate method. And this one is the next step up. It's a little more refined, so it's going to give you a little bit more accurate product cost. And the premise here is that we can, whatever the overhead costs are, we can trace certain of the overhead costs. Remember, it was 4.8 million. We can trace some of that overhead cost to Department A and some of the overhead cost to Department B. Now, each department is going to have its own allocation base, whereas before we only had it based on direct labor hours used for everybody in the plant. Here, we're going to figure out what is the cost driver, or what drives the cost being assigned of overhead, drives the overhead cost in Department A, and what drives the cost of overhead in Department B. And most likely those may be different. For Department A, we may use machine hours and as our allocation basis. In Department B, we may have direct labor hours or direct labor costs. So, and then since each product has to go through both departments, because remember we have a standard go-kart and we have a custom go-kart. Well, you still have to machine and make the body of it, the different pieces, and then you still have to put them all together to make the final product. So the go-karts, whether it's a standard go-kart or the custom go-kart, are going to have to be worked on in Department A and then Department B in order to be completed. So our cost objects, just like for the plant-wide overhead method, is the product unit itself, the unit of product itself. In our allocation base, in this case, we're going to have 2 cost pools. All the overhead costs for Department A are going to be lumped together as one cost pool, and Department B is going to have its own grouping of overhead costs that we can trace back those overhead costs to the different departments, although it's going to be very difficult to trace them back to the individual product. So at least we can trace them back to the individual departments. And in this case, we're going to calculate a departmental overhead rate. We're going to look at splitting up the overhead costs, and we're going to split up. We can, out of that 4.8 million of overhead costs, we can trace 4.2 million of that to the machining department. So we're going to split that up. Machining department is going to absorb 4.2 million, $4,200,000 worth of machining overhead. And the remaining $600,000, we can trace that to the assembly department. So we're tracing them to the different departments now. Now we're not tracing them to the products yet because we can't trace them to the products. Why? Because there's no cost-effective method of using it, which is the very definition of overhead. So while we can't trace them to the individual units, we can trace them to the department that those units are created in. So now what I'm going to do in this step in the machining department, I'm going to take that $4.2 million and divide that by the estimated number of machining hours, because that's my cost driver. That's the thing that we're doing that's driving the cost. My cost driver is machining hours in the machining department, so I'm going to take my estimated overhead divided by my estimated machine hours for the period to get my overhead rate per machine hour in the machining department. Then in the assembly department, I'm going to take that $600,000 of overhead and divide that by the number of labor hours that we expect to incur in this period in the assembly department, and only in the assembly department, to allocate my overhead for that department. And as we go back here, you'll see that each product will get overhead allocated from Department A and department B for product 1, and then product 2 will get department overhead rate from A as well as B. So in this situation here, remember our departmental overhead rate is going to be departmental overhead costs divided by the budgeted amount of the allocation base for the department. So what we're going to do is we're going to look at the machining department first. Remember, we're going to make 5,000 standard go-karts and 1,000 custom go-karts. We need to figure out, since machine hours are allocation base, we need to figure out how many machine hours are we going to incur in the making of these two products, the standard go-kart and the custom go-kart. Now, for the standard go-kart, each unit requires 10 machine hours to produce a go-kart. So 5,000 units at 10 machine hours per unit, I'm going to use 50,000 machine hours to make the standard go-karts. The custom go-kart, we're going to have 1,000 units. We're going to make of that, and each one of those units requires 20 machine hours per unit. So we're going to have a total of 20,000 machine hours used to produce that 1,000 custom go-karts. So what are the total machine hours I'm going to use in the machining department? Well, the 50,000 for the standard go-kart and the 20,000 machine hours for the custom go-kart. So it's going to require a total of 70,000 machine hours in the machining department for this period. So that's when I take my overhead rate down here. My estimated overhead in the machining department, 4,200,000. Divide that by 70,000 machine hours, and I'm going to get an overhead rate of $60 per machine hour. Now let's go to the assembly department. In order to make 5,000 units, the assembly department is going to require 15 direct labor hours per unit. So 5,000 times 15 is 75,000 direct labor hours needed to make standard go-karts. And for custom go-karts, it requires 25 direct labor hours per go-kart. So to make that 1,000 custom go-karts, it's going to require 25,000 direct labor hours. Now I'm going to add up all my hours together to get the total amount of direct labor hours needed to produce in the assembly department 5,000 units of standard go-karts and 1,000 units of custom go-karts. So remember, my assembly overhead was $600,000. So I'm going to take that $600,000 for the assembly department overhead, divide that by 100,000 direct labor hours, and then I'm going to get $6 per direct labor hour. So in this case, we've just created an overhead. Instead of one overhead rate for everything, we're just doing the overhead by departments. Now, so that step one is figuring out what we're going to do with the overhead rates, figuring out our how we're going to allocate overhead between the two different departments. Step two is calculating overhead rate per department. And now step three is figuring out the amount of overhead assigned to each unit. Now, let's look at a standard go-kart. We have the machining part. Remember, standard go-kart and custom go-kart are going to both be going through the machining and the assembly process. So we would expect overhead assigned to each go-kart, each type of go-kart, based on machining overhead and assembly overhead. Now, departmental overhead rate, $60 per machine hour. Each unit takes 10 machine hours. So the overhead allocated for the standard go-kart in the machining department is $600. Now the standard go-kart will move to the assembly department where everything will be put together. And overhead is assigned at $6 per direct labor hour times 15 direct labor hours per unit. So in the assembly department, we're going to assign an additional $90, $6 per direct labor hour times 15 direct labor hours per unit. And this is going to be on a per unit basis. So the total overhead that I'm going to assign to the standard go-kart is $690. Now, let's look at the custom go-kart. We're going to go through the same process here. We're going to figure out on a per unit basis how much overhead to assign from the machining department and then from the assembly department. So overhead, $60 per machine hour in the machining department times 20 machine hours per unit. So in the machining department, I'm going to assign $1,200 of overhead. Then the custom go-kart moves to the assembly process, and it's going to incur $150 of overhead just in the assembly department. $6 per direct labor hour times 25 direct labor hours per unit. So altogether, for the custom go-kart, I'm going to have $1,350 of overhead. That's the $1,200 incurred in the machining department and the $150 incurred in the assembly department. So now when I get my product costs, I'm going to add my direct materials plus my direct labor plus my overhead and get of $690 for the standard go-kart. So my product cost per standard go-kart is $1,440. The custom go-kart, $600 of materials plus $500 of direct labor plus this $1,350 for overhead being allocated gives us a total product cost per unit of $2,450 per custom go-kart. Now look at our product cost per unit. Let's see the difference here. If I use just the plant-wide rate method, my cost per unit is going to be $720 for the standard go-kart and $1,200 for the custom go-kart. Now, if I use a departmental rate method, look at that. My overhead cost per unit changes. It actually went down $30 here, and it went up $150 here. Now, why is that? Because we're more accurately refining the overhead costs and allocating them on a more nuanced or more refined method by using multiple allocation bases. So when we do these three methods, we're going to get a different overhead cost per unit. Now, direct materials and direct labor costs will be the same no matter what method of overhead we use. Why? Because we're still going to use the same amount of materials and we're still going to use the same amount of labor to make the. So the only question is, how do we allocate that overhead? And we see now there's a difference in choosing a plant-wide rate and a departmental rate. Now, let's take a look at assessing the plant-wide rate and the department overhead rates. What are some of the strengths? Well, they're easily available. I mean, we can, like direct labor hours or machine hours, we can easily compute those estimated hours based on what we expect, how many units we expect to produce. And then it's really easy to implement. And it also complies with GAAP. It can be used for external reporting. Now, the weakness is that typically overhead costs are too often complex to be explained by factors like direct labor hours or machine hours. So in practice, making a simple product or two would be good for using a plant-wide rate or a departmental overhead rate. But the more product diversity we have, the more the diversity of product offerings, that becomes a weakness then, using either the plant-wide rate or the departmental overhead rate. So that's the strengths and weaknesses. What are some of the assumptions? Well, some of the assumptions are going to be that overhead costs with the plant-wide rate method, overhead costs change with the allocation base. So in other words, all products will use overhead in the same proportion. Um, for companies with many different products or those with products that use overhead costs in different ways, the assumptions of the single plant wide rate are not reasonable. And why is that? Well, when overhead cost bears little relation to the allocation base, allocating overhead costs using a single plant wide rate is going to distort product costs and lead to poor managerial decisions. And that's what we call overcosting and undercosting. Overcosting is when we assume a product has more costs than it really does, and undercosting is when we assume that a product has less cost than it actually does. Now, the departmental overhead rate method will it assumes that different products are similar in volume, complexity, and batch size, and also the departmental overhead costs are proportional to the department allocation base. Now, when products differ in both batch size and complexity, they usually consume different amounts of overhead costs. This can distort product costs as well. And because the departmental overhead rate method allocates overhead based on measures closely related to production volume, it's not gonna take it's going to fail to accurately assign any overhead or many overhead costs that are not driven by production volume, such as depreciation or factory insurance, things like that. So this is the plant-wide rate and the departmental overhead rate methods for allocating overhead. In the next session, we're going to look at activity overhead costing using activity-based costing. I wanted to create two videos here to separate it so we could focus on just the simpler methods, and then now in the next video, we'll focus on everything activity-based related. So that concludes this session. My name is Leroy Meadows. Have a good day.